welcome to the Wall Street Lab. This episode, as you can tell, is going to be slightly different than the regular podcast that you are used to, as this is the first time we are recording video. And today we are joined here by Dr. Thomas Bloch, who is the co-founder and the co-CEO of the Robo-Advisory platform Vaamo. Today we'll be discussing a variety of topics, including how Vaamo operates, how you got started, as well as your transfer from working in investment banking into the Fintech community. And we're looking forward to the interview. Hello, welcome to the show.
Hello, thanks for having me.
So why don't we start off with where we usually start these interviews. We ask people people in finance, how do they explain to people who have no idea about finance or the startup community, what is it exactly that they do? How would you explain what you do to extended family member at a family party or a cocktail party? How would you go about that?
So I assume what doesn't work is that we build a leading robo-advisor in Germany. No, our goal is really to provide everyone with an easy and intuitive access to capital markets, and we provide an online platform that allows you to invest your money broadly diversified at low cost without the requirement of you spending a lot of time and getting yourself into the nitty-gritty details of investing.
Perfect. So maybe you could tell us a bit about yourself and how did you get to the place where you are now? We know that you've been working previously in banking and in finance. Where did this journey start? Maybe we could start somewhere around when you left high school. Was finance on your mind straight away as a subject of studying before you got into banking and further on into Fintechs, or was it something that came along spontaneously?
No, not really. I think we have to go back to somewhere to 1997. I think when I left school, I wanted to do an apprenticeship in banking, which is probably something that used to be common in Germany, that prior to starting a job or for some prior to going to university, they wanted or had to do kind of a practical training, combining both business school education and working in different departments of whatever industry or company you would be doing such an apprenticeship in. I decided that I would like to do this apprenticeship in banking, and I was then asked whether I would like to do this apprenticeship for Deutsche Bank in London. So I spent 2 years working for different back middle office areas with Deutsche Bank in London, and then I came across a venture capital fund, DBE Ventures, which at the time used to be Deutsche Bank's strategic venture capital arm, and I worked hard to work there for a couple of months as part of this apprenticeship, and also during my term holidays at university. And that was actually the first time I got in touch with what is today called Fintech, because they at the time invested in these type of companies like Intralinks, Riskmetrics. And all of my colleagues, or most of my colleagues at least, had an investment banking background, M&A, corporate finance, and that probably was the starting point when I considered joining an investment bank. Obviously, I had to go back to uni to do a diploma or master degree in finance, which I did here in Frankfurt. But during my studies, I started an internship with JP Morgan here in Frankfurt. And they made me an offer, and I had a great experience, and so I decided to join JP Morgan. Probably at the outset, I didn't have in mind to spend more than 8 years with JP Morgan. I was probably more on a kind of 2-year time horizon, and thinking, okay, let's do 2 years, I will learn a lot, and then we can see what's next. But actually, I really enjoyed my time there and ended up working there for 8 years. Most of the time then for the European financial institutions team, advising banks in the German-speaking region, but also asset managers across Europe on M&A and capital markets transaction. So again, a lot focus on the financial services industry. And together with my co-founder, Oliver, we started in 2012 spending a lot of time discussing how the financial services industry is going to evolve. And I think from today's perspective, no surprise that technology and changing customer behavior will change the financial service industry significantly. And while working for many of the large institutions, we found that they will find it extremely difficult to respond to this change quickly and effectively, which led to our decision to build our own business to drive this innovation and actually leverage on this market opportunity. And yeah, this is exactly when we founded Vaamo, beginning 2013, and that's what I've been doing since.
Was the idea very spontaneous, or was it something that came along slowly and you sort of built up to the point where you said, okay, this is something we need to do?
I think the exact idea did come over the course of a couple of months, but there had always been a desire to build up your own company or become an entrepreneur. And obviously, as many people do, you had kind of discussions around different business ideas over beer. You found other people actually realizing these ideas, which you also had, and at some point you just get the feeling, okay, I have to do this. I think fintech or financial services was somehow set given our background, because we didn't want to do anything that was completely new or off from what we've been doing, and we also wanted to leverage what we've built in terms of our network and experience. And also investing felt like something, there's a need, but also it would solve a personal problem, because also we had the good knowledge of how financial markets work, how you should actually invest your money. We didn't have the time or didn't feel in our free time to actually want to spend time on investing money. We always felt there should be some sort of automatic solution where if you have spare money, if you get a bonus or so, you can just pay in the money and it's automatically invested in the best possible way. And we saw the same issue with people around us, and this then really led to our focus on Robo-Advisor. And I think in addition, we also had at the same time the discussion with Andreas Hacketal, who's a professor at Frankfurt University and has been investigating the investment behavior of private individuals for the last 15 years, analyzing what are the typical errors investors do, how they should actually be investing their money, and obviously also his insights and his motivation also to provide a better way to invest money actually also contributed significantly to our decision kind of to found this company and build it up jointly.
How would you describe the switch between going from the investment banking culture and jumping into the fintech startup space? How is that transition for you if you were to compare these two worlds?
Cool and like a cold shower. So it's totally different. I think in terms of working style, I think nothing has changed, because at some point you have developed your own way how to work, really. But I think the range of topics you needed to address, you needed to get your head around are much broader. It's not just corporate finance. Also, I always saw the investment banking job as a very diversified job. I didn't feel that one day was similar to one another, but still it's much broader, and I think what also a key difference is that you are in the driver's seat. You can actually decide where you want to set your priorities, what you want to do, and you make the choices at the end.
Perfect. Can you give us an idea of how your typical day looks like currently? Is there something like a typical day?
No, it's like throughout my career, there's not one typical day. Well, probably get up at somewhere between 6:30 and 7 if I don't have to catch an early flight or a train. Typically get up with my daughter, bring her to her kindergarten, and then I go to the office. Typically I'm here sometime between 8 and 9, and then it's calls, meetings, all sorts of things. There's not one standard day in terms of structure or in terms of the topics. I'm thinking around 1 week it's more focused on financing, the others it's on B2B sales, the others we focus a lot on product development, depending on in terms of what really needs your attention at the time.
Perfect. So let us switch gears a little bit and talk a bit about more business questions and fintech related questions. How do you feel the fintech environment, the current fintech developments are disrupting the banking industry, and which areas do you see being most disrupted or maybe have the biggest potential to be disrupted in the nearest future?
Mm. I think fintech impacts all of financial services. I wouldn't say there's one area that is affected more or less. I think technology is the theme that goes all through. I think in terms of the terminology you used, I would probably be less emphasizing on the term disruption, because I think what you currently see, there's more kind of an evolution, and also it's not a confrontation vis-a-vis banks, but in most cases it's more about collaboration. And I think by now financial institutions understand and acknowledge that the world is changing. They will still find it very difficult to respond quickly, but across areas from wealth management, payments, loans, and in recent months, or you could almost say years now, also on the insurance side, I think everything is changing. I think it started off very front-end related, so customer focused, and I think now it's also moving from front-end to kind of more back-end functions to make banks and the operations like trading, settlement, etc. more efficient. And you see increasingly also a shift from B2C, where many of the fintech companies started off to B2B areas. I think very early on started out in the lending segment, but it's again kind of going through all segments now. So I wouldn't say there's just one or a segment that is affected the most. It's really across the board.
So as a person who's deeply involved in the community of financial startups, would you say that there is a difference between the developments that are happening between Asia, US and Europe? And if so, how is the experience of doing business as a fintech in Europe in comparison to these other places?
I think when we started off here in Europe, we were definitely a couple of years behind what we are seeing in the US. I think in many areas Europe has caught up or is even ahead. I mean, London is by no means the global hub for fintech. I think the key difference, and I'm not an expert in US or Asian fintech, I think probably European fintech is most prominent to me. I think where I see the key difference is really the financing or funding environment, which is strong in Europe, and Europe attracts a lot of capital also from outside investors. But it's still a different approach of how to build a business, given you typically have less capital available in each of the stages of the company, which makes it more difficult to really be disruptive compared to the way a US startup can scale up and really change a market. But this is not fintech specific. I think that holds true for most of the startups. That's probably where I would see most of the difference. I think another difference is really that almost depends on the type of product is the culture. I think there are countries like Frankfurt today, so Germany, which take more time to adapt new technology. People are more reluctant to try out new things. People may, especially when looking at wealth management, are not that much focused on capital markets or open to capital markets investments. And obviously that technology or openness to adopt new technology, but also your interest in financial services products really drives the adoption. And this is clearly something where at least continental Europe is from my perspective, much slower compared to what you see in the US, in Australia, in South Korea, or these kind of places.
For our listeners who maybe have not come across the term Robo-Advisor, could you maybe briefly explain what a Robo-Advisor is and what it really does?
Mm-hmm. I mean, typically it's an online platform that allows you to invest your money in capital markets. You could respond, okay, this is actually what the online brokers have been doing since the mid-90s. And I always describe a robo-advice proposition as the online brokerage alternative for a much broader customer base. The online broker is typically an offering for a very active investor, somebody who has usually a lot of knowledge when it comes to investing, somebody who enjoys spending his time making investment decisions, and somebody who is able to pick the right instruments from thousands offered on these platforms, build their own portfolios, decide which instruments to trade through which stock exchange at which price. And this is a complexity and requires an effort most private individuals don't want to get into. And Robo-Advisor is really the easy and intuitive alternative, allowing you to invest your money in a sensible way, which typically means broad diversification and low cost, and at the same time actually helping you to make the right decision or find out how you should be investing your money by providing you some sort of automated advice, which essentially means, like in our case, we ask our customers around 15 questions to determine what is their risk-bearing capacity. So how much can they actually afford to lose in an adverse scenario? What's their risk preference? So how long can they sleep well without kind of getting nervous about how their money is invested, and also their existing experience and knowledge. And based on the information we obtain from the customer, we make a recommendation of how the customer should invest his money, and then actually implement this investment strategy as part of a discretionary mandate, and then continue to monitor his investments and make adjustments depending on market developments, etc. So what we provide essentially to the customer, and this is how we look from a product development perspective at this, we sell peace of mind. So the customer knows he has taken care of his financials, he understands that he has done the right thing, but if he doesn't want to, he doesn't need to care about it. Obviously, we are transparent, we are 24/7 online, so he can monitor what we are doing and what's happening to his investment, but that's something he does not necessarily have to do.
Perfect. That's actually a great explanation that covered all our points regarding the next questions. So you mentioned that you have a specific investment strategy for your clients. Now, if I'm a client and I come to the Vaamo website and I ask myself a question, what's better? Should I purchase the S&P 500 or should I dedicate my money to you? And then this is the question I would personally ask myself. What would be your answer to this?
I think in principle you're already a very knowledgeable person when it comes to financial instruments and financial markets, because you actually already know about the existence of an S&P 500 ETF or some sort of instruments, which many people don't do, or they may find it difficult to actually pick the S&P 500 ETF over an MSCI World ETF or some sort of other ETF. And I think what we offer in terms of comparing to just one ETF is a much broader diversification across geographies, across asset classes, and also taking into account the number of companies, so underlying stocks your money is invested in, which depending on your risk return profile may make a lot of difference, because an S&P 500 may be far too risky for many people to invest in. And actually to find out what is your risk profile and how you should be investing and basically spreading your money is what we help to do. This is probably from this type of question the best answer. We are kind of your coach, your partner when it comes to investing, and you don't have to make these decisions by yourself.
What are some of the typical questions that you ask your clients in order to determine the risk profile?
Mm-hmm. I mean, in terms of risk-bearing capacity, we want to understand what's the customer's situation in life. So what's his wealth situation, what's his income situation, how much money does he have available to invest, and how long will he have a regular income, always kind of from a risk perspective. If things don't turn out the way you expect, and there will always be more or less volatile times when investing in capital markets. Can you actually afford to lose some of your money, or do you have sufficient time to either recover your losses or kind of continue earning money also from your regular salary? In terms of risk preference, we present our customers different scenarios of how their money could develop in the best case, in the worst case, and let them choose kind of what's the profile they feel most comfortable on. And then we cross-check that also by asking the customer, okay, stock markets go down by 10% in a given month, how would you react? Would you buy additional stock? Would you not do anything? Or would you actually sell everything? That also kind of reconfirms how you think about the risks you want to take, and also is a good cross-check for the risk-return profile selected by the investor.
So how often does it happen, as your service is entirely optimized by algorithms, how often does it happen that a customer would require some additional human support? Does this situation come into play often?
Not often. We have a customer service, so there's always somebody available to talk to, and this is very important for people to know and understand that there's a human behind the robot, but it doesn't happen very often. We would actually love for it to happen more often, because we see a clear value to also providing kind of personal touch points, and we just recently did an analysis of how many clients a customer service representative can serve, and we came out that currently, and that's probably not even the fully optimized situation yet at all, that one customer service representative can serve 10,000 customers, which gives you an idea how intensive the personal interaction indeed is. Or actually not is.
I see. You were talking about algorithms and how you manage the portfolio for the clients. Are there any specific strategies that sit behind these algorithms? Do you use portfolio management teams, or do you use algorithmic trading in order to manage and level the portfolios? Is it something that you can talk to us about?
I think first of all, there's a lot of talk around algorithms when discussing robo-advice propositions. I think generally I would say robo-advisors are not reinventing how money is managed. They are not quant funds. They are not developing any new asset management methodologies or techniques. I think what they do has all been out there in the asset management industry for years and decades. What they do is provide an online and access with a very good customer experience, and automating actually all asset management and other operations processes, so you can serve customers in a fully automated way, and thereby even serve smaller customers profitably, what has not been able or was not able in a personal advice context. So going back to your question, we deliberately take a very passive approach. So what we do is we define a strategic asset allocation. Thereby we principally distinguish between a world portfolio, which is kind of a portfolio supposed to be of risky assets and a portfolio of, well, they are still risky, but not so or less risky assets. And then depending on the risk profile of the customer, we mix the two. So if you're high risk, you may end up with a 100% risky asset portfolio, what we call the world portfolio. If you are a customer with a very low risk profile, you will end up with a portfolio of 30% risky assets and 70% less risky assets, which may be government bonds and covered bonds and so on. And then we don't employ a tactical asset allocation, so we deliberately don't have a market opinion and have a view of whether emerging markets will outperform in the next 3 months or not. Because we believe that, and this has also been proven by science, that a tactical asset allocation only provides for about to 10% of the returns, but also adds additional risk to the equation. So that's something we don't do. In terms of actively managing money, we are also, given we don't have a tactical asset allocation, we don't shift around the assets that much. What we do is we select the funds based on a catalog of several criteria to really identify the best funds, which are typically ETFs, to invest in from the whole universe that are available for distribution in Germany. And that's all transparently shown on our website. And during the investment horizon, we focus on what we call rebalancing. So depending on market movements and the deviation of your individual portfolio from your strategic asset allocation, at some point this portfolio is rebalanced. And we do something that we call smart rebalancing. So if you have additional contributions, like an automated monthly savings plan, which more than 75% of our customers do have, then only those funds in your portfolio are bought that are necessary to bring the overall portfolio towards the strategic asset allocation. This is especially beneficial from a tax perspective, because if you do rebalancing and you still sell certain instruments, obviously you have capital gains taxes that you may need to pay. If you do smart rebalancing, you change your portfolio allocation without selling any instruments, therefore you don't have any tax leakage.
Let's jump back to the operational side a bit. And we all know that startups face a lot of problems on the way before launch. And what was your story when it came to, we were talking about automating services. Was there a particular service or part of the service that you found especially hard, a big roadblock on the way to becoming successful?
I wouldn't look at it as roadblocks. I think in our evolution, probably the most significant decision we made is a shift from B2C to B2B. When we started off, we started building a B2C business with a goal to provide a proof of concept for Robo-Advisor and for Robo-Advisor in Germany. Which is a model that we still run, and that's working nicely without spending any marketing. It's growing faster and faster every month in terms of number of new customers and also assets under management. But in 2015 we started really thinking about how to scale this business, and I mean, it's no secret that building a financial services brand takes a lot of time and in addition a lot of capital. And at the same time, you need to continue to educate the market, because Robo-Advice is maybe known to us, but if you ask the individual on the street, most of them think about their independent financial advisor, their bank advisor, or think, well, investing is not really something for me because this is for the wealthy people. Robo-Advice has not yet reached everyone, or is kind of a main street product. And taking this together is very difficult if you expect ending up with only a share of the market, and this is definitely not a monopoly game, so you will end up with a share which is probably also on the smaller side than the larger side. At the same time, we observed the developments in the US with the Charles Schwab Vanguard scaling much faster and to totally different levels with the robo-advice propositions compared to the new market entrants, the likes of Betterment and Wealthfront. And we very much came to the belief that the awareness and trust for robo-advice propositions, and therefore also the growth of the market, will not be driven by new market entrants, but will be driven by established financial institutions adopting these services or this technology. And that's when we decided to build a B2B business, which, based on the great demand we see from financial institutions and also the traction we already achieved, has become the focus of what we do. So last year we, for example, launched white label offerings for Santander in Germany. We launched a cooperation with N26. And in December we also launched a cooperation with 1822 Direct, which is the online bank within the largest German banking sector, the savings banking sector. And this is really our strategy, helping financial institutions launch and run those services. And we essentially provide the full robo-advice value chain as a white label solution, something we refer to as robo-advice as a service. And I think this decision and shift was probably the most significant. I wouldn't say difficult, because I think rationally it was apparent that this should be the right decision. But still, it's a big step. You have totally different requirements, you have a totally different working style, and also it's something that you need to manage culturally within your organization, because a B2C organization things breezes and works differently compared to a B2B organization. So this is something you need to manage very well. Yeah, I hope this answers your questions, not in the shortest form, but
it does. That was perfect. You mentioned the capital intensity of building a financial business. What would you say is the best method of obtaining this sort of capital to finance a business like this, and what was the way that you did it?
I mean, we started off talking to business angels, which I think in an early stage was probably the best way, not only in terms of the amount of capital you need to attract, but also in terms of getting expertise and extending your own network across the industry. I think thereafter there's no way around venture capital, be it from family offices or venture capital funds themselves. And we started very early on building a network in the venture capital community, not only in Germany but really globally. And the first, so to speak, institutional investor or venture capital investor that invested in Vaamo was actually Route 66, a US-based firm focusing on fintech with a lot of their focus on asset management and robo-advice. Perfect.
Outside of your own organization, what is your favorite fintech in the space that you see in the moment?
What's my favorite fintech?
What is something that you see the greatest potential in, or a company developing currently that grabbed your attention?
I think what I find, I mean, on the B2C side, I like N26 very much, just kind of showing how intuitive and easy to use banking can become, and how you can seamlessly integrate all sorts of different financial services into one application. I mean, we're working with N26, but even if that would not be the case, that would be my answer. I think what I find exciting is fintechs building banks. So not just focusing on the front end, but building banking platforms like Solaris Bank. And this will be interesting to watch, because all financial institutions are struggling with their IT infrastructure, and at some point they probably need to just build a new platform from scratch, or obtain kind of a fully digital platform from the likes of Solaris Bank. And I think that has a huge potential to change the industry, and who's actually running the actual business, banking business in the background.
You work in Frankfurt day to day, although you travel a lot, but you've also previously worked in London, and maybe there's some appropriate questions since you've been to both of these places. How do you feel that Brexit affects sort of the Frankfurt area, and do you feel what's been going on in the startup community because of it? I mean, I don't recognize Brexit in Frankfurt. My personal view is that likely some financial institutions from London will move, or will at least move parts of their teams to other locations. But that will be spread across places like Dublin, Paris, Amsterdam, Frankfurt. So there will be more people coming and moving to Frankfurt. But so far, I haven't seen that much of a change. I think from Berlin, you hear more people saying, okay, there are more startups migrating from London to Berlin. I haven't recognized the same in Frankfurt yet. I see. So you've been working on Vaamo for a few years now. If you were to go back to when you started and you were to give yourself 3 pieces of advice with the knowledge that you have now, what would those 3 pieces of advice be? Can you think of something specific?
Focus even more. Try to do less things, but the fewer things you do them faster. I think we are spending a lot of time with customers and getting feedback, understanding their requirements. I think you can never do more on that. So that's probably something I will try to do even more, and also early on, because it's a great way to learn, but it's a great way to roll out your product. And lastly, which is related to the first one, probably launch much quicker. I think even with less functionality, I mean, financial services is about trust. It should work, but it doesn't have to be kind of a full set of features. You can start with a very narrow and good proposition. And doing that as early on as possible helps you in any way, in terms of growing your business, in terms of learning, in terms of having discussions with investors. So having something market ready early on is extremely helpful. Perfect.
So on this note, where can people find out more about you and what you're up to? Do you have a Twitter handle or your website?
Well, I would refer to our website, which is www.vaamo.de. It's spelled VAAMO.de. And you can also find us on Twitter @TeamVaamo. Perfect.
Is there anything that you would like to leave our audience with as a final note?
As a final note, I mean, maybe referring to your last question in terms of the piece of advice, probably unrelated to what we have done, but I still see a lot of entrepreneurs or wannabe entrepreneurs hiding their ideas because they are anxious that somebody will steal their idea. And therefore they will not be able to build a business. I think nobody should hide ideas. They should actually be out there discussing this idea, because you receive so much support, advice, investors, if you just kind of start talking about it. And it also helps you to sharpen your thinking, and most likely will also start kind of switching or kind of twisting your idea or your business model. And that these discussions and the openness we have received in the startup space, but also here in the Fintech or in the financial services community, has been extremely helpful. So don't hide, share.
Perfect. And on that note, we'll be finishing up. Thank you very much for the interview. Thank you for being on the show.
Yeah, thanks a lot for having me.
Cheers.